Cbus manages over $24 billion in superannuation savings for members. Of this, nearly $2.5 billion is invested in Australian and international infrastructure. The growth option, which is where most members are invested, currently has 11% allocated to infrastructure. With us here today is Grant Harrison, Cbus Manager Private Markets, to talk us through how Cbus invests in infrastructure. Grant, thank you for joining us.
Happy to be here.
Grant, what is infrastructure?
Emily, infrastructure assets are the physical facilities we need for the functioning of our society. They tend to be large investments and are expected to provide services for many years. And due to their essential nature, they're often regulated by governments. Types of infrastructure include transport systems like roads and airports, communication systems such as transmission towers and cable networks, and utilities, for example, water and power distribution, and social infrastructure, such as education facilities and hospitals.
Grant, what principles does Cbus follow to invest in infrastructure assets?
We look for assets that have a moderate level of risk and that generate stable cash flows and returns. We prefer infrastructure assets that are regulated or that dominate in their sector, and we prefer to invest in infrastructure that isn't listed on a stock exchange. Unlisted infrastructure provides us with better diversification, and we also expect to achieve an additional return for illiquidity, that is, the fact that it can't readily be converted to cash. And finally, another key principle is that the investment can provide a degree of protection against inflation due to the nature of the cash flows received.
What sort of return is Cbus aiming for from its infrastructure investments?
Yes, Cbus targets around 9% a year on average over the long term after investment fees and tax.
We've talked about principles, but what's your actual strategy for investment in infrastructure?
Our strategy is to invest in unlisted pooled funds managed by specialist infrastructure teams to get exposure to infrastructure assets here and overseas. Our core infrastructure managers are currently Industry Funds Management and Hastings, and we seek a diversified exposure across region, asset type, whether the income is regulated or not, and with a particular focus on core infrastructure. Given the size of Cbus, we also consider opportunities to directly invest alongside our pooled investment funds. And as an example, we've co-invested in Port Botany and Port Kembla in New South Wales alongside the Australian Infrastructure Fund, which is managed by Industry Funds Management. And combined with our holding in the pooled fund, this is our largest infrastructure investment and in fact is the fourth largest in the fund.
Grant, you mentioned the New South Wales ports. What are some of Cbus's other large infrastructure investments?
Emily, of our larger infrastructure investments in Australia, we've also invested in Port of Brisbane, and we're invested in several airports, including Melbourne, Perth and Brisbane, and in a renewable energy company, Pacific Hydro. Overseas, our larger investments are in Manchester Airport Group and Anglian Water in the United Kingdom, and in Essential Power, a power distributor in the United States. Importantly, however, a common characteristic across most of these assets is their core and stable cash flows with only a limited exposure to development risk.
Thank you for joining us today.
Thanks, Emily.